to the RationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief public show. I don't know what the hell to call this. Anyway, let's see what's the theme of today's video. Stock market shed some gains as less than favorable U.S. Econ data released. Oh, cool. Is that the subject of today's video? All right, awesome. I never know what the hell I'm going to talk about when I turn this thing on with you guys. Will say I had a very I suppose the whole point of this is to make money and I had a fairly productive day, so feeling pretty good. Of course, you can always follow my fun little Twitter feed whenever I bang out nice winning trades, especially if I'm doubling my money. I think it's a good habit to get into that, when you double your money, you at the very least let half go. Maybe you do a little bit of a premium. In fact, actually, a couple of the fills that I got here today were at a bit of a premium for when my previous doubles were. But actually, what's fascinating is I literally sold right on 4669s today. I had two stocks that I bought in my registered account, so you don't have to worry about tax implications there. So it was a very nice day, no doubt about it. And then on top of that, to add insult to injury, my trading partner and I absolutely killed it in the day trader world. And I was having lots of fun on the site posting. You can't even see our trade here. I mean, the whole point of this is you want to try and clip the market for a few ticks here, a few ticks there. So this is what's called the opening range trade. And actually, you can see, I love when this happens. Through the opening range, they actually put a W in price. Oh my God, you can't ask for anything better than that. So just buy on a stop through the high of the opening range, and then instantly, bang, plus 17. And actually, I've upped the bet sizes, so we're going to do 5 contracts now. The only problem with that, of course, is damn commissions. I hate paying commissions. More contracts means more commissions, but anyway, it's no big deal. So clipped a nice little 34 ticks on our first car. Then 68 ticks, 2 times 34 ticks there on the second leg. And then this thing just, this is the best part. If you could ever get into this situation, oh my God, it makes life so fun. You just place your stop at scratch on your runner. And in this particular case, I don't know whether it was a good idea. I'll tinker with this, whether I should be selling twos here or not. I had one car left on and I just let it run, and you can see, holy free holies. The market just went absolutely crazy in our favor. And did I get a little impatient? Maybe. I did start to see, 3 high-low method, 1, 2, 3 on this tick chart. This is like just a 15-second chart. I started to see some weakness. I was like, what the hell? Let's declare victory. It was like a 265 ticks on the day. Absolute monster trade there. So very, very happy with the performance. And really, more importantly, what I really want to be for all of you is the demonstrator of best practices. That it's just, I don't even give a two fluting flutes about the money. And ironically enough, if you do this game correctly and follow the process and follow the way that you're supposed to do this, the money just takes care of itself. What really sucks about this game, of course, is that everybody starts thinking about the money and how rich they're going to get and when do they get to buy their Lambos and all that kind of nonsense. And then the ego starts coming in where, oh, listen to that guy, the famous line in Trading Places with Eddie Murphy, right? Where Thinking about going long April wheat, Valentine. What do you think? And the whole room stops, right? Oh, what's this guy going to say? Who cares about that? Just try and follow the process. And frankly speaking, your opinion doesn't mean anything in this game. My opinion doesn't mean anything in this game. It means jack shit. Just understand that from the get go. Your opinions are meaningless. The only thing that really matters is setups. And of course, how can you actually do what you say you're going to do? If you can't do what you say you're going to do prior to initiating the trade, then really you got no business in them being participating in the market, and the market's just going to take your money and laugh at you. So anyway, there was my day trading, following my plan, and booking a really nice win. The only thing that pissed me off was having to pay $15 in commissions. These bastards, they're all crooks, I tell you. Actually, it was interesting. Past couple days, we have been having a lot of anecdotal evidence of weakness in the market. It started off really, I think, prior to the beginning of the new year, where we had the stock market itself. This is the S&P 500 futures. And I even tweeted this out. I mean, the beautiful part about what we do at TRI is we're not here to reinvent the wheel. I will never say, like this is Brian's silver bullet setup and it's the only one that you should trade. What we're really here to do, again, like I said, is just try and demonstrate best practices. This was a really good example of what we call an El Tangonator setup, where you have pretty good trade location. We were right up at the top end of the range, had lots of bearish momentum divergences starting to develop through top here, and of course you can see a really pretty M top, and down she goes. I did this on the big boys because I just wanted to show you the impact of trading the big boys. I've only got one, I let 3 go here, which is an absolutely horrendously huge trade. 99% of the public probably couldn't afford to do this trade. It's just too big. But nonetheless, bought 2 back on the initial dump, which itself was like a $2,000-3,000 profit, $1,500 a contract. And then again, demonstrator of best practices, I'm just going to simply use a concept that we teach in our education program called the 3 high-low method to try and trail stops, where you're just going to use market structure here, and you just count backwards. I've got a pivot high here, a pivot high here, and a pivot high here. 1, 2, 3. All right, I can move my stop here, which just so happens to be scratch on the trade. So you can see there is my scratch trade. If this thing gets busted out, well, then I make $12 on the trade. So anyway, point of the matter here is this thing actually crossed $4,000 profit on one damn contract. That's how big this contract is. I get the feeling, of course, we are watching the January barometer very closely. That's what this image is. You can see the first hour out of the gate. Oh boy, that's not a good sign. The first day out of the gate. Notice a bit of a reoccurring theme here. We're going from the upper left to the lower right, upper left to lower right. We did come back smartly here in the last 5-10 minutes of trade. But then look at what they did today. They literally just gapped it lower and just continued the bloodbath. So again, I think this whole market smacks of manipulation. But anyway, what a big surprise. The capitalists are cronies. And as a general comment on society and on being a human being, these baby boomers are just an absolutely stunningly corrupt generation. I mean, they're disgusting. They have no morals whatsoever. I mean, can I alienate any more people while I'm blabbing away here? I mean, I'm absolutely disgusted. Every single opportunity these baby boomers have to try and redeem themselves, and they keep showing how utterly corrupt and just disgusting human species can be if you see the negative side of them. Just awful. And we're of course watching all these stupid fucking politicians. When I was growing up, politicians actually put all their assets into a trust, and they were not allowed to actually trade their own accounts while they were holding political office. Where did all that go? How did all that disappear? When did our moral fiber of our society just disappear? And fucking uh, Joey Diamond there's playing footsie with that Elizabeth Warren in the U.S. Congress talking about how Bitcoin's a fraud. Meanwhile, fucking what the hell's her name? Elizabeth Warren's net worth is like 50-60 million dollars. And yet you look at her annual salary as a senator and it's like a couple hundred grand. How does that work, ma'am? Oh God, this anyway. Yeah, get me off on rants. Anyway, so the point of the matter here is, I get the distinct impression 2024 is going to be a bit of a challenging year here, right? I always say, as the first day, week, month of the year goes, so goes the year. Having said that, notice that there is quite a bit of back and forth here. So don't be surprised if we actually, this is the middle of the week, and notice that this counter trend rally happened just about the middle of the first hour. This counter trend rally happened about the middle of the first day. So don't be surprised if there's some sort of big counter trend rally to take us back up, maybe even as into these highs from Monday. Maybe even over the next, I don't know, maybe the next day or two. And then also remember too, talk about just absolutely insane corruption. Oh yeah, have you noticed how they manipulate the market into options expiry every Friday? And of course, we know that options are nothing to do with the Securities and Exchange. They are derivative. They are cleared off market, so they can be as corrupt and as brutal as they want to be. And, if you are interested, I can show you an example. In January of 2020, basically every sort of 1% fat catter was selling the stock market like insane and selling the stock market, sadly, to the public who were like circle jerk orgy buying. And of course, we all know what happened in February, March, April of 2020, right? Sickness, corruption, bullshit. So, I mean, Jesus, this world just stinks of corruption. So, I wouldn't be surprised if heading into that Friday event, you get a bit of a counter trend rally here and they firm this thing up a little bit, but we'll see what happens. We'll cross that bridge when we come to it. All I'm just going to simply say with regard to the January barometer is this is looking a little bit challenging here, folks. So, we are keeping an eye on Bitcoin. Interestingly enough, here is sort of the first hour. Now, my question here, and this is probably something we should cover probably in the after party, is what time frame should we actually study the January barometer for Bitcoin? Do we do it while we are going through the holiday session when the stock market is closed, or should we be measuring this based on the retail participation? I don't know what the answer to that is, so I'll just keep a close eye. Thank you, Chris, for letting me know that time is running up and I better keep moving on. So, you can see the broader market, ironically enough, is not very happy right now. I would suggest that maybe, and this is sort of what I've been doing lately, is just going through all my stock portfolio. This is a crypto name. Obviously, crypto's done fairly well here over the past year or two. You can see where the W's are. Fascinating 4.669s, 50% levels, gap fills, and not a big surprise we rallied up. And actually, I was telling people this on the site recently that, the stocks themselves, they always say that the stocks always lead the commodities. So I do find it interesting that late last week, we did see the stocks all start to break in earnest here. So anyway, it behooves me. You see where I'm long from about 460, 470. Double that, that's $9-10 somewhere in that area. So we were above $10-11, starting to show a bit of weakness. So I was like, you know what, let's just let half of it go. That's good, demonstrator of best practices. Good idea to put yourself in a position of strength. And I can always just go buy this thing back if we come back down to trend lines, reload zones, etc. So that's sort of what I'm thinking in the crypto market. There was actually warning signs that things might get a little dangerous here. Probably the leader in this space. Look how we ran into 2.6. Is this not a reason to join TRI and learn this stuff? Holy crap on a stick. How many people do you actually see on the public interneting that actually teach you chaos theory? Nobody does. As Brian Beamish does. I'm not quite sure why he does. I think I've told you this story. Interactive Brokers guy says, "Oh, I made my fortune trading chaos theory." Then the interviewer goes, "Well, could you please explain chaos theory?" This is the end of this interview. Thank you very much. Anyway, what a beautiful analogy of 2.618. Bang, rejected, market coming off. So, if you were sitting there kind of going and seeing the way that coin was getting ripped here over the past couple of days, and then kind of been like saying, well, crypto is totally immune from that. This is a really good lesson for all of you that the old rule in the market, this is 35-year veteran talking to you. The old rule in the market is stocks always lead the commodities, always. So should it surprise us that, oh, hey, that little move higher was actually bullshit the other day? Well, in the daily brief yesterday, I had pointed out that we were coming into some interesting Feigenbaum levels. Price had actually gone a little bit too far. You might even argue that this was, in fact, actually, I think on a higher time frame chart, I think this was like a 1.272 off of the off of this extension range. Notice 1.272 ran into that level, 4.669, good old foggy boggy, and bang, just got rejected. And then, of course, what letter of the alphabet do you see here? This really shouldn't be a surprise to any sort of long time viewer of my channel and stuff and listening to me talk. I mean, I don't know. Who can tell me how does this expression go? I don't know whether we should finish the conversation off on this note here for the public broadcast today. But what are we supposed to think if we ever see the market smiling at us? Bang! That's what you're supposed to think. Anyway, so, the point of the matter here is we had a bit of telegraphing from the crypto sector. So I think there was a little bit of a tell there. And, if you did participate, I wouldn't necessarily say that this is like an investor signal. I think this was more of like a trader signal. If we drill down to like the lower time frame charts, that's where the trade really set up. This was, I mean, isn't this tool fucking awesome? We have, trade location, 1.272s, Feigenbaums, etc. You pull up the divergence indicator tool, and we have 5 different confirmed bearish momentum divergences. So what's Brian's 3-step process? Maybe somebody should copyright this. You hear other guys on the internet saying, this setup is awesome. I tell you, this 3-step setup, it's the shit. It's the way trading works, I'll tell you. So anyway, trade location, step 1. Number 2, indicator confirmation. Bearish confirmed, bearish divergences is the shit. And then number 3, can I get some sort of price structure to help me frame risk? And I walked everybody through this trade yesterday. I had no idea what was going to happen. Everybody's opinion was crypto was going to go to the moon. Then I get this short setup come in. I say, look at everybody. I got to short this. The setups come in. And here we are down here now. I always think it's a good idea to let half of the position go at a pretty good price objective, 50% rule. I tell everybody this is a really good profit objective to use. Now, the irony of all of this is that I actually think that this was actually a buying opportunity first thing here this morning. 4-hour candle body lows for trade location. You've heard me say this 100 times before, and I find it fascinating. If you had traded this bot, this higher time frame, you notice we hit move stop to break even. And had you taken the bot setup, boom, you were just basically politely told, walk away at scratch. Now, what I do find fascinating is all those trade location people. You can see we noted 4-hour candle body low for trade location. I really wouldn't fault you if you actually stepped in and had a bid working at that level and you are actually long right now. I'm still working this short, and I will get out of the short on sort of that, like I showed you with the ES. If I'll use the 3 high low method. So right now you can see I've got one key high. I had a high here, but that got taken out. So I have one key high here, two key highs, three key highs. I actually still have to have my stop at the original entry level. Like I showed you on the ES, if we do actually start getting a bearish market structure, I can start moving my stop down. But right now, there's nothing for me to do on this. And frankly speaking, I'm not in a hurry to do anything. I think I've also talked to you guys before about things like profile. This is an absolutely beautiful example of volume profile and this concept of the MUOC. So I'll leave you off with this image. Anytime you ever see a really well-defined POC here and a really well-defined POC here, you know that the market loves this part of the profile. And I would actually make the argument before this is all done, if this actually is a top, that this entire part of the profile needs to be filled in. So we'll let this thing develop over the coming days. We'll see how this thing fills out. My hunch is probably, like I said, I actually wouldn't be surprised, like range traders who buy in here, we're probably going to do something like a 50% retracement. Oh, hello, look at what just happened there. So I wouldn't be surprised if this thing actually goes right back up into the reload zone. And for anybody who actually missed the original entry, oh, what a surprise. Look how 786 and 88.6 are right at the original breakdown. So let's see how price acts heading up into this level. Or if we start making bearish market structure and I have 3 lower highs, I can start moving my stop down. But keep tuned. We'll see what happens over the coming sessions. But the long and short of it here is, from my perspective, I think that this was a bit of a bullshit move up top here. And anybody who had the cojones to step in and short that M, obviously they got paid nicely. All right, I think I'm going to leave the rhetoric at that for today. FYI, we have, remember I had said, look for some sort of counter trend rally here midweek. In about an hour and a half, we're going to have the Fed minutes. My hunch is that those minutes will actually work as a bit of a pivot. The inflation data came out pretty benign today. The price index was up slightly on some econs that came out. Most of the econs are showing economic weakness. I wouldn't be surprised if you actually maybe get the initiation of some sort of counter trend rally. Believe it or not, I actually think, and like sort of thinking that the corn could move back up. Believe it or not, I actually think that this is some big ass head and shoulders here. So I wouldn't be surprised if there is that sort of midweek rally, like we said, January barometer, take this thing off of its lows. You can see the head and shoulders pattern developing here. Yeah, we'll see how it goes. Slow and steady wins the race. PMA for the win. Watch those Fed minutes. They'll be out in about an hour and a half or so. And if there is going to be some sort of counter trend rally off of that event, I think that's probably the fundamental catalyst that triggers it. But, we'll check in with you guys, I guess, on Friday. Tomorrow is Julian's day, so have fun with him. And I'm just going to go and sit and count all my day trading winnings and fantasize about buying Lambos. All right, have yourselves a great day. PMA for the win. All the best. Hugs and kisses. If you did make some profits on some of these crypto stocks, cryptocurrencies, maybe consider taking a bit of profits. I know I did here today. All right, have yourselves a great day. All the best, and bye for now.